Okay, today we'll be learning about the statement of financial position. Now, a quick recap, okay? The other day we talked about the financial statement, which are the number one, the income statement, and number two, the statement of financial position, okay? So we have already covered the income statement is made up of the trading account and the profit and loss account, okay? So for a trading business, they have these two, and for a service business, they do not have the trading account, so they have only the profit and loss account, okay? So and then the other one is the statement of financial position, which we are going to be covering today. So we have done this. So we have done income statement, we have done the trading account and the profit and loss account. So this is what we are going to be talking about today, okay? So now let's take a look first, okay? We have already learned about the accounting element all this while, okay? The assets, the liability, and owner equity, okay? So all these accounts, which is under the accounting equation, remember the accounting equation, A equal to OE, owner equity, plus liability, okay? These accounts, they will go into the statement of financial position, okay? Asset, owner equity, and liabilities, okay? Whereas for this account, income and expenses, they will go into the income statement, okay? So this is about statement of financial position is about asset, owner equity, and liability, whereas this one will be about the income and expenses, okay, under the profit and loss account, because profit equal to income minus expenses. So if income is more than expenses, then it will be profit. If the income is less than the expenses, then it will be loss, okay? So this is a quick recall. So now let's move on to this one, the statement of financial position today, okay? Okay, statement of financial position. So this financial statement will record it will exactly be the accounting equation inside the statement of financial position, okay? So what it records, it will record what the business on, okay? Assets is what the business on, items that the business on, and what the business owe, which is the liability and owner equity at a particular debt, okay? So what the business on, asset, and what the business owe to the external sources, the liability, and what the business owe to the owner equity. So these three, asset, owner equity, and liability, will be shown in the statement of financial position, okay? So a statement of financial position will show the financial position of a business at a particular date, okay? This is as opposed to the income statement where the heading will write income statement for the year ended. This one, statement of financial position, you will see that it will write at a particular date. For example, statement of financial position at, for example, 31st December 2010, okay? It will show a particular date, okay? So statement of financial position, as I said, it will reflect the accounting equation as what the business owns must equal to what it owes, okay? So both these sides must equal, okay? So the assets are the resources of the business and what it owes from where it gets these resources. So assets can be divided into non-current asset and oops, I miss out here, non-current asset and current assets. And this one, owner equity, as I said already, drawings and the profit or loss will affect the capital, okay? So what make up the owner equity is capital plus the income minus expenses, okay? So this is the profit or loss, okay, from the income statement minus the drawing, because the drawing will reduce the capital, okay? So this portion will make up the owner equity, okay? And this one, liability, is made up of non-current liability and current liability, okay? So let's take a look at the content of the statement of financial position. So you see, this is the content. First of all, you have to write the name of the business here and statement of financial position at the debt. Okay, so now let's go through the theory first. Okay, this is the vertical no, this is the horizontal format of the statement of financial position. Okay, but let's take a look at the content. Okay, so as I said, statement of financial position will have the assets, the owner equity, and the liability. Okay, so this asset must equal to owner equity and liability. Okay, so asset we have non-current asset and current asset. Liability we have non-current liability and we have current liability. Okay, so we have already covered this at the very start of this subject, but then we will just have a quick look. Okay, so non-current asset are the asset that are permanent or long lasting. Okay, this asset will remain in the business for more than 1 year. Okay, whereas opposed to the current asset, you see they are normally used up within 1 year. Okay, less than 1 year, and current asset can be easily converted into cash. Okay, non-current asset is permanent, more than 1 year, and then they are used in the business. Okay, for example, like the machinery, the motor vehicle, the equipment, land, and all that. Okay, they are used in the business. Okay, and non-current asset normally they are listed in the order of permanence. Okay, so the most permanent or the long-lasting items are shown first. Okay, so we are going to list down, for example, land first, followed by plant and equipment maybe, and then machinery. Okay, so these are will be listed first because this is the most long lasting asset a business will have. Okay, and the less permanent will be shown last. Okay, for example, motor vehicle, they change it, or maybe even this one. Okay, now current assets can be converted into cash and normally used up within 1 year. Okay, so non-current asset more than 1 year, current asset within 1 year. Okay, less than 1 year. Current asset can be easily converted into cash. Okay, so as we have already learned, okay, the three current asset that you will come across is the inventory, the stock, the trade receivables, and the cash, either the cash in hand or the cash at bank. Okay, these items are frequently changing. Okay, frequently changing because, for example, cash is changed to stock when the goods are bought. Okay, for example, your cash, you use it to buy the goods or the inventory. Okay, and then the inventory you sell it to the customer who on credits or trade receivables. Okay, so if the trade receivable they pay you, then you will have cash again. Okay, and then cash you use it to buy the store, and then the process goes on. Okay, so as you can see, these items that are frequently changing. Okay, they are more frequently changing in their nature. Okay, and they can be easily converted into cash. So these are the current assets. The items are listed in the order of liquidity. Liquidity meaning the items that is easiest to be changed into cash. Okay, they are listed in the order of liquidity. So starting first with the asset furthest away from being turned into the cash, meaning it's more difficult to change into the cash. Okay, thus the easier the business to change into the asset into cash, the more liquid it is to be. Okay, so basically liquidity is how easy to change the asset into cash. Okay, so that's why the cash will be listed the last. This one will be listed first, second, and then the last. Okay, now let's move on to the other side, the owner equity or capital. So owner equity is what the business owe to the owner. It's the owner investment in the business. So how do we find how we construct the owner equity portion is capital at start plus the profit, because profit will add on to the capital, minus the drawing, then we will get the capital at the end. Okay, plus profit minus drawing, then we will arrive at the capital at the end. Non-current liability are debts. Okay, debts. So non-current are long-term debts, whereas current are short-term debts. Long-term debts means that it will take more than one accounting year to settle, like bank loan, mortgages, and so on. And again, they are listed in the order of permanence. Short-term debts are normally settled within 1 year. Okay, so example, trade payables and bank overdraft. Okay. So assets, these are the items of the statement of financial position. Assets equal to owner equity plus liability. So assets what we own, okay, non-current assets and current asset, and equal to what the business own, okay, the owner equity. Oops. So it will be the owner equity and the liability, okay. What we owe to the owner and what we owe to the external sources. Okay, this is owner equity and liability. Okay, so this is the format of the financial position which you need to be familiar with, because we are going to prepare this format, the vertical style format. Okay, so first of all, you have to write as normal or as usual, you have to write the name of the business, and then you give the heading, statement of financial position, and then you write the debt. Okay, each section, you should write it in full without abbreviations, okay, and you should include the name of the business. Each section should be total, okay. For example, this is the total. And negative figure, for example, like drawing and all that loss should be shown in the bracket, okay. You have to show the negative figure. If it's to be less, you have to show it in bracket, okay. Now okay, so now let's have a quick look. So this is the format of the statement of financial position. So it will be divided into 3 columns. You have to lay it out like this, okay? Cost, accumulated depreciation, net book value, okay? So this is the format. So let's have a overall glance at the format. So let me minimize this, okay? So as you can see, the statement of financial position is made up of the asset, owner equity, and liability. So this part, you see, this part are the assets, and these parts owner equity, and these parts are the liability. Okay, so this amount over here, must equal to this amount over here. So for example, if this is example 10,000, so this amount over here will be 10,000, okay, because assets equal to owner equity plus liability, and this is reflected in the statement of financial position. So basically this is quite easy to do. You just need to be familiar with what are the non-current assets, what are the current assets, what are the non-current liability, and what are the current liability, then you will be able to do it, okay. So first of all, we list down the non-current assets, okay. So listed in the order of permanence, okay. The most permanent ones we listed first, okay, like land and building and all that, okay. So you list down, okay, all the non-current asset, okay, the cost, and this is the accumulated depreciation, if there's any. We have not yet learned about the depreciation, so we'll come back to this. We'll come back to the depreciation topic next time. So the cost minus the depreciation, then you will have the net value, okay, which we call the net book value. You write over here, okay. For example, this is 1,000 and this is 500, so this one you will get 500, okay. So you do it like this, okay, and then you draw the line to total up, okay. This is the total amount. This one minus this one equal to this one, okay. So all these are the asset, non-current assets. Next, if they are intangible asset, then you will need to list down. But normally, if they don't give you, then you don't have to write it down. So intangible assets, the asset that are non-tangible. Okay, by tangible are the things that are physical, for example, office equipment, motor vehicle, and all that. So intangible assets are, for example, like copyright and goodwill. Okay, they are intangible. Okay, non-physical. Okay, so you list down if they give you, and then write the amount. And next, current assets, as we have already talked about, there will be the three main one, which will be the inventory, or we call the stock, the trade receivable, and the cash. So you see inventory, the trade receivables, and the cash, okay. So these are the cash, okay. This one, other receivables, this topic we have not yet covered, so we'll come back to this, okay. So the more prominent one are the inventory, the trade receivable, and the cash, okay. So inventory, this one we have also not yet learned, but this is the format. We will talk about the doubtful debt when we learn about this topic. So if there's given to you doubtful debt, so trade receivable minus the provision for the doubtful debts, okay. So you write down inventory, this one minus this one, how much, and then you list down, okay. So you just need to know what are the items under the current asset and you list them down, okay. And owner equity, as I already said, owner equity is the capital plus the profit and minus the drawing, okay. So capital add profit, or if it's a loss you have to less it, and then less the drawing, then you get the capital at the end, okay. You less and then you get the capital at the end, because profit will increase the capital and drawing will decrease the capital, okay. And finally the non-current liability, you just list down, okay. Loan or mortgage, you just list down. If there are quite a few items, then you'll list on this side. If there's only one item, then you list straight on the last column. So current liability are the trade payables and bank overdraft, trade payables and bank overdraft. This one we have not yet learned. When we learn, we'll come back to this, okay. We'll come back to this topic. So you just list down the trade payables and all that. So when you add up, so this portion, all the assets, the total asset will equal to the owner equity plus the liability. You will get the same amount, okay. So that's how you prepare the statement of financial position, okay. So the statement of financial position in the service business will be the same format as a trading business, okay. Now this one, we just have a quick look, okay. There are three types of capital. Number one is the capital on, okay. So capital is asset minus liability. Working capital is the amount available for the business to meet the short-term debts. So it's the difference between the current asset and the current liabilities, okay, to meet the short-term debts, okay. So working capital is current asset minus current liability, okay. So it will be this one, the amount of the current assets minus the current liability, okay. And lastly, this one you just just have a brief idea is enough, okay. So capital employed refers to the long-term fund from the owner and the creditor. So it will be the capital plus the non-current liability, okay. So these are the long-term funds of the business. The capital plus the non-current liability is the capital employed, okay. So that's the three different types of capital, okay. So that's the end of this topic on the financial statement. So we have covered already the income statement, which consists of the trading and profit and loss account, as well as now the statement of financial position, okay. So let's move on to the exercise. So I'd like you to do the exercise.